Welcome to Independent Living Bullion's weekly market wrap podcast, helping precious metals investors during these treacherous times. And now, here's this week's market wrap with commentary and analysis from the fastest growing precious metals dealer in America, Independent Living Bullion.
This is Mike Gleason with Independent Living Bullion, and it is my privilege now to be joined by David Smith, Senior Analyst at the Morgan Report, which is one of our sister company's monthly publications titled Money, Metals, and Mining. And David is a wonderful market insider and a real student of all things precious metals, and we're very excited to get a chance to talk to him today. David, welcome, and thank you for joining us.
Thank you, Mike. It's great speaking with you today.
Well, here we are in early 2013, and gosh, it's been nearly 2 years of consolidation in the precious metals markets, which is probably a lot longer than many would have expected. And now, many may be frustrated or wondering why we can't seem to get any sort of sustained move to the upside in gold and silver. And for the moment, we'll just concentrate on those two metals. Definitely want to get into the platinum group metals with you later on. But in terms of this consolidation period in gold and silver, give us your thoughts on where we are and where we're headed, because you really have a good big picture perspective on things that I want our listeners to hear.
Well, with the disclaimer that nobody can predict the future, but we all keep trying. But at the same time, looking at the big picture, I think all of the underpinnings that have led to the gold and silver and platinum, palladium prices rising pretty consistently over the years are still in place. In fact, many of them are even more pronounced now than they were before. So the story is still out there. Within the context of a secular bull market, you have pretty big swings in both directions. And as you mentioned, the metals themselves have held up reasonably well, but the mining stocks have really gotten hammered over the last couple of years. And the best of the best are down from where they were. And so I operate on the assumption that I can expect to see 50% retracement in the price of some of the very best producers, and for an exploration company it could be a 90% drop, and yet those ones that are still good are still going to be around and come back. But it really is hard when you hold a position and you see these kind of drops, but that's what's been going on. And we now have massive paper money being reflated all over the world to increase the price of assets, and not too many people understand the difference between inflated dollars and nominal dollars, but there is a big difference there, and it's going to come out in the wash one of these days. So I'm still very bullish on the metals, and what I try to do is keep a little cash in reserve so that I can buy prices that go lower than I expected.
And I've heard you mention, you and others, about how we generally get our biggest move at the very end of these bull markets. So there's certainly a long way to run, and those who don't have core positions are going to want to get in before that leg takes place, because it can be explosive when it finally moves.
That is correct. David Morgan has discussed this for a number of years, and if you look back at the dot-com mania in 2000, and if you look at housing, if you look at all of these things, you'll see that during the last portion of the move, and David likes to talk about the last 10% in time of the move, you can see gains of 80 or 90% of what would be available for investors during the entire bull move. And so I think we're going to see the same thing in the precious metals. It's a few years off, but it is coming, and it's going to be pretty exciting. As Doug Casey likes to say, the easy money has been made, but the big money lies ahead.
Yeah, that's a great point. Definitely something that people need to remember. When you and I were talking the other day, you mentioned some really exciting things going on in the platinum group metals, and you indicated that we could be looking at some really explosive things in that sector of precious metals. Talk about what you're seeing with the PGMs and what's got you so excited about those these days.
I've been quite fascinated with the PGMs, primarily platinum and palladium, for about the last year. And I've looked at a couple of properties in North America that are quite interesting. I've been aware of the price movements for the last several years in the PGMs. And the interesting thing about them is that they oftentimes will start a move before gold and silver do. So gold and silver have been kind of backing and filling in a wide range over the last almost 2 years now with a slight downward bias. And platinum and palladium struggled for a while, but then a few months ago they started fairly strong moves. And so we have here, now that we're talking, we have palladium above $700 an ounce. We have platinum, which had been about $200 cheaper per ounce than gold, which is very unusual, has now regained itself to be more expensive than gold. and traditionally it has run from $200 to $300 higher than an ounce of gold, and it's steaming to move back into that area again. It's now $40 or $50 more than gold after languishing for about 2 years. And so I kind of look at this as kind of an early indication of what we're going to be seeing down the line with gold and silver when they break out to new nominal highs at some point here going forward.
Yeah, I'm just looking here. I mean, platinum is up nearly $200 since the first of the year, and we're just in early February. Palladium's up about 8%, making a run towards 800 again. And Eric Sprott, who's definitely a big mover and shaker in the precious metals industry, he launched the Sprott Physical Platinum and Palladium Trust recently. So that's going to help with demand for the PGMs on the investment side. It's just going to get those metals on more people's radars.
I think you're right on the money with that. And then if you look at the supply side, the PGMs are quite interesting in that most of the production comes from a few areas. South Africa accounts for the lion's share of it, and then Russia, and then Zimbabwe. And so you take all that together, that's over 90% of the PGMs come from those two countries, those three countries, each of which have their own unique issues, and all of which call into question the reliability of supply. And a market does not like uncertainty, and when the market is uncertain about things, the prices can get very volatile. So I think you're going to see very big swings both up and down in platinum and palladium over the next few years with a very strong upward bias.
Platinum is still several $100s below its 2008 high. I think it got over maybe $2,300 an ounce. And when you and I were talking recently, you mentioned palladium has gotten over $1,000 an ounce, if I'm not mistaken, at some point in the past because of supply shortages out of Russia. What was that, about a decade ago?
I think it was around 2004 on that, and it went up to 1080. It had been about $200 an ounce or a little less. And that was driven by supply concerns. Ford Motor Company made a very large purchase of palladium, and they bought, I guess, pretty close to the top on that. And they ended up selling it a year or so later for a $1 billion loss. So it shows that you don't have to be just the little people like you and I investing. Sometimes the big entities can make even bigger mistakes than we do.
Yeah, and that's an interesting point that they bought near the top. To Ford or the other automotive manufacturers, they don't really care what the price is going to be because they don't want to put themselves in a position where they can't make cars because they can't get the raw material. So, it doesn't make a difference if it seems like it's a really high price at the moment. They're still going to hoard it, and obviously, hoarding just begats more shortages and so forth. And so we could see that dynamic that play out again. But I mean, you mentioned South Africa. There's obviously a tremendous amount of strife going on over there with the labor issues they've been having. I think I read that over 30 people had been shot and killed by police during strikes. And do you think we could see maybe a nationalization of the mining industry over there? I mean, because obviously if that were to happen and we turn over, a big industry to a government, that's probably going to hurt the production of the metal.
There are several things going on in South Africa in regards to the PGMs, all of them negative from the standpoint of reliability of supply. You have 3 or 4 companies accounting for like 90% of the PGM production in South Africa and about 70% of the world production. And you have the labor issues that you referred to. There was a massacre last summer which killed 35 or 40 miners, and real enmity going on there. There's a question of miners being paid more. They don't have the use of machines as much as we do in the West here. A lot of it is done by hand in deep areas, dangerous areas for relatively low pay. And so these things are coming back to haunt the industry. Gold has been in a very serious decline production-wise in South Africa the last 10 or 12 years. And so the PGMs are kind of headed down that same rat hole. Also, a lot of the surface PGMs have been harvested, and so they're having to go deeper. In addition, the government itself, as you inferred, is doing some things that are inimical to enabling these companies to be profitable. In fact, right now, several platinum mines have closed their lines down because they're basically treading water in terms of breaking money, even at these prices. And so the government is talking about having basically what would be an export tax beyond a certain amount on these companies, so that it would almost limit what they could make with their profit regardless of how high prices go. And so you've got the taxing entity, you've got the systemic social issues and beyond the mining fraternity itself, the society, the vast gulf of wealth between the rich and the poor. And I think that these things are going to continue to flare up over the next few years because there hasn't been any real important solution to the problems. And so all of these things and the extra cost, it costs more and more for energy to do this mining, all of these things are conspiring and moving in the same direction to make the reliability of supplies of PGMs, primarily platinum, from South Africa to be questionable at best. And so this puts that uncertainty in the markets, and they're already relatively small markets, even in relation to gold and silver. And so it's going to be really dicey and pretty fascinating for investors going forward. And that's just talking about South Africa, not even discussing the unique problems that Russia and Zimbabwe have in regards to their own production expectations.
And basically, when you invest in those metals, you're betting on supply disruptions in some very tenuous parts of the world, which for my money seems like a pretty safe bet, and we're seeing that play out right before our eyes, as you mentioned.
Right, and you'll see some of these production curves go up from time to time. But for example, it's pretty well believed that the overhang in palladium that came out of Russia, out of the Norilsk deposit, is pretty much gone, and they were able to supply the market for a number of years and really keep a damper on prices. But it's widely believed that it's just not there anymore. Now, they still have more palladium, but they don't have that stockpile. And so for palladium, really, really a wild card in that regard. And, of course, the problems in Zimbabwe with nationalization and this type of a thing. And so that's going to continue on, all three of those issues. And something like 6 or 8% of the PGMs are actually produced in North American entities, and that's a pretty small amount. So this is going to be going on at the very same time that on the demand side, we're having increased demand from new entities and also increased demand from industrial entities, where about 2/3 of the actual consumption of the PGMs currently is.
Getting into that, China, of course, is a major automotive consumer, and you just look at a place like Beijing, for instance, and I'm not sure how many beltways they're up to now around the city, but they're expanding the infrastructure all the time just to account for all the new automobiles on the road. So, despite continued economic weakness in the Western world, we've got a huge percentage of the globe over there in India and China where we've got the rising middle class, and the demand for automotives and just all resources is likely to continue.
Right, and they're used in the cars as we use them over here. It costs about $200 to put platinum in for a catalytic converter, and both platinum and palladium are used as converters, and they have a certain exchange that they can use one for the other. But platinum is primarily used in cars that run hotter, like regular engines like you and I mostly drive. Palladium works very well in diesel engines, and there's about a $1,000 gap there, palladium being about $1,000 cheaper than platinum. And so we're getting strong demand from both diesel production and regular car production. And this is one of the things, I wrote a report last summer on a PGM property that I had looked at in Yukon. And one of the conclusions that I came is what I called a triple demand bypass. And the market was looking at that time of what was believed to be fairly substantial surpluses of PGMs going forward, because the world was mired in a bit of a recession, and a lot of people were calling for an even deeper recession. So that people are going, we're going to have a surplus here, no problem. Also, a lot of the Japanese car parts manufacturers had been knocked out of action due to the Fukushima disaster and the tsunamis there, and so they were offline in terms of production, and that was taking demand down. And then also, there was a tailing off of demand from the investor side. So the assumption was that line of reasoning was going to fall out, and we weren't going to have to worry for a couple of years. But what happened is that the market turned around more quickly than people believed, not only in China but also in the United States, where we're having very strong auto production now. And so suddenly this demand was there, and then you had the issues of supply from South Africa, not questionable. And suddenly, all of a sudden, we have Johnson Matthey coming out and saying we could have the lowest amount of PGMs available in the last 12 years. So it was a complete 180 turn, and I think it really caught the market by surprise, and that's why you're seeing some of this catch-up going on in terms of prices, which have been pretty strong across the board for the last couple months.
One of the reasons we like silver so much is the industrial component, the fact that we're always seeing new applications come out for silver all the time because of its tremendous use in a number of industrial applications. Do we see the same sort of dynamic in the PGMs, or is it mainly just as catalytic converters and then I guess some jewelry demand as well? Is that mainly what it is at this point, or are we finding new applications for those?
An external look at the surface would indicate what you just said, and we know that even today that 2/3 roughly of platinum and palladium are used in catalytic converters. But the reality too, if you dig beneath the surface a little bit, you'll see that both of these metals are finding all sorts of increased usage in medicinal practices, in other industrial things. Almost every type of cell phone and laptop and electronic device has some kind of amount of PGMs in them, and these are mostly not retrievable. Now, catalytic converters can be, that can be harvested to use a lot of that metal again, but not so much with these other things where a small amount is used, and they're price inelastic, a lot like silver is. If you double the price of palladium or you double the price of silver, the people are still going to use it in there because they have to have it, and because the price is a relatively small part of the total cost of that item, and so they're not out too much. And so I think we're going to see some of the very same dynamics, especially with palladium, as it narrows the gap between itself and platinum, that we see of of silver in relation to gold. And so I find the study of both of these to be very, very fascinating, because we have new investment elements that were not even here a few years ago that are going to impact these metals and drive them much, much higher over time, even though we'll see big swings up and down in the interim.
It's all fascinating stuff, and a lot of people don't really even give it too much thought, those that might just be focusing on gold and silver in the precious metals markets. But the dynamics are obviously a little different for the PGMs, but that's why they can be great portfolio diversifiers for precious metals investors. Really ought to take a look at having some exposure to the PGMs. There's potentially a lot of upside there.
That really is true, Mike. And for example, platinum and palladium can be purchased just like gold and silver. They're called bullion rounds, and of course they even have some that are made in the United States, like the American Eagle, Silver Eagle, and Gold Eagle series. You can buy maple leafs, or you can buy just company rounds, 1 troy ounce. You can buy ingots. And so these are, more and more people are understanding that you can actually add these to your portfolio. And there's an increasing, very heavy investment demand in China, not only for investment of the rounds that we've just been discussing in ingots, but also in jewelry. And in China, the jewelry that is made out of the PGMs tends to be around 85% or higher in purity, whereas in this country you can buy gold jewelry, for example, that might be 20, 30, 40%. Still looks really wonderful, but they value the higher purity over there, so that puts an even bigger demand on what are very, very small markets, not to mention the rise of exchange-traded funds, which again are all pushing the demand place forward and taking more and more supply off the market, most of which is not going to be immediately available unless we see much, much higher prices.
Well, in closing here, David, just want to get your take on what you think investors should be doing. Obviously, those that might have jumped into this market a couple years ago feel a little worn out just because of what happened and the long consolidation period that's followed that. But what sort of advice would you be giving people right now who believe there's something not right with the world and they do need to have exposure to something real, meaning precious metals? How much should they be investing, and what type of approach should they be taking right now based on where we are in this bull market in precious metals?
Well, I think people have to really look at their own circumstances, their risk tolerance, what their goals are, and really the first thing about buying, especially like silver and gold and even platinum and palladium, should be as insurance first. So you do your research and you do insurance, and this way it will protect the downside of some of your other assets as they lose value due to inflation. But the big mistake that people can make, I think, is to get an idea, okay, they listen to us and they're very excited about the PGMs and they want to go out and buy a bunch tomorrow. Well, they've already had a pretty substantial run here. Palladium was $200 an ounce lower just a few months ago. And I did a look at 5 years of palladium prices to give you an example of the volatility, which I think is only going to get worse. This is 5 years of prices. $600 an ounce to $200 to $800 to $600, and now around $750. Those are huge swings. So if somebody bought a couple months ago, they're feeling pretty happy, but if they go out and buy now at $750, it might drop to $675, and they're going to be dispirited. So what I like to suggest is that when people do decide to do something, they don't go all in, but they buy tranches, a portion. So if they have to be in right now, they would buy a portion now, and then they would buy a portion only at lower prices and only a third portion that's still lower. Now, those two may not be filled, but there's a good chance that at least one of them will be. And meanwhile, instead of feeling a panic when prices drop, you'll almost be hoping for lower prices so that you can fill the rest of your order rather than going all in and then being sitting there with no cash to buy at a lower price. And I think that's just as true in buying precious metals in the physical space as it is in the mining stocks, because the volatility in both directions is going to keep on getting more and more. But I do believe that people that take a modest position after doing their own research in this sector and hold on for a few years are going to be very, very happy.
Well, David, thanks very much for your time and your excellent insights. That's great advice there, and we definitely hope to do this again in the future. Thanks very much for coming on.
It was great talking with you today, and it's going to be very exciting seeing where we go over the next weeks, months, and years. I think it's going to be historic eventually at the end of this.
Well, that will do it for this week's Market Wrap. Thanks for listening, and my thanks to David Smith of the Morgan Report once again. This has been Mike Gleason with Independent Living Bullion. Have a great weekend, everybody.
Thank you for joining us for this edition of the Independent Living Bullion Weekly Market Wrap. Be sure to come back next week. And don't forget to subscribe to our weekly podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Visit us at www.independentlivingBullion.com or call 1-800-800-1865.